It is my pleasure to invite the esteemed panel for this session onto the stage. Please join me in welcoming them with a hearty round of applause. This session shall be moderated by Mr. Alok Mishra, Chief Executive Officer and Director, MFIN. May I request him to please join us on stage? May I also request the esteemed panelists for this session to please join us on stage? The panelists for this session are Mr. Anand Rao, Managing Director, Chaitanya India Fin Credit Private Limited, Mr. Ashish Goyal, Chief Credit Officer with Jeevan Small Finance Bank, Mr. Balaji Iyer, Head Global Microfinance and Head Public Sector India, Standard Chartered Bank, Ms. Divya Singh, Senior Investment Officer, International Finance Corporation, Mr. Feroz Anam, Chief Risk Officer, Credit Access Grameen, and Ms. Samanyika Nayak, Chief Executive Officer, Credit Cooperative Seva Bharat. Good morning and a very warm welcome to you all. I now hand it over to the session moderator. It's over to you, Mr. Alok Mishra.
Yeah, thank you. Good morning in a chilly Delhi morning to everybody, including the panelists. Good to see at least some numbers in the hall. I thought that because the topic is managing risk in microfinance, and going by what is happening in the sector today, there is heightened risk perception among many's mind. I thought there will be more of a crowd, but anyway, I hope more people will join in. So, let me start with brief introductory remarks before I turn to the panelists. While any financial sector institution, whether it is microfinance, NBFC, MFI, or a bank or a cooperative, faces the usual type of risks, which is either credit risk or liquidity risk or regulatory risk or market risk. It is all common and everybody measures it accordingly. But, and currently, if you look at whatever the newspapers say and whatever the data also says, the focus is more on credit quality or credit risk, you can say, because the credit risk has increased over a period of time, if you see the figures for even for 30th September. So the more focus is on credit risk. But before we turn on to the panel, let me also tell the audience that while the credit risk is being talked about ad nauseum in newspapers, articles, everybody is talking about, is it this moment for microfinance? Is it that moment for microfinance? Let me remind everybody that in last 15 years data which I have seen, including the AP crisis of 2010, from 2009 to 2024 September, if you look at the trend line data for 15 years, the average loans which have gone bad, or you can say NPA, or those have been written off, is somewhere around 2 to 2.25%. So 2 to 2.25%. So on a trend line basis, if an industry, which industry in financial sector has given that sort of a portfolio quality, lending unsecured loans, lending loans at the doorstep, providing doorstep services, and still over a 15-year line, only written off 2.25%, which can be a genuine cases of, you can say, business failure or some other issues. No other financial sector asset class, whether if you see retail, unsecured loans, secured loans, any corporate loans, the NPA ratio or loan write-off ratio is much higher. So that was a disclaimer from my side, that while you will read a lot about it, but the sector is in, I feel, and November and December figures show that the sector is stabilizing, so not much of a concern on my side. But still, I will leave it to the experts. So I will start with, and I have a very distinguished panel. I have got 1, 2, 3, I would say practitioners. From an NBFC, leading NBFC MFIs, number 1 and 2. Anand represents Swatantra and Chaitanya. Feroz represents Credit Access Grameen. So 1 and 2 in our listing in NBFC MFI. We have got a multinational, international bank, Balaji. Then we have got a small finance bank, Ashish with us. Then we have got an IFI, International Financial Institution, Divya with us. Then we have got a cooperative, Seva Bharat, Smarnika from us. So it's a very diverse mix. Hope we will be able to do justice. But where is the session moderator, session compere? Madam, the time being shown is 41 minutes. Do I stick to that? Huh? Okay. Okay. Now, so I will first turn to Balaji, because Balaji, you are the wholesale lender to NBFC MFIs and all that. So all this talk about risk framework and increased risk in this, has it led to any rethink in you as a bank as a whole, that how do you assess the microfinance institutions, or it is business as usual still and you are also on my side?
So, like you said, we are a wholesale lender, and to that extent, we are one step removed from what an actual practitioner faces. Uh, and we are insulated because bulk of the shocks that are taken by the MFIs. But having said that, over the last 6 months, there has been a lot of internal, how do I say, exchanges with risk, because they have been hearing a lot of news in the market, and most of my risk people are concerned and alarmed at the same time. And while the fundamental risk framework has not changed, we still look at capital, etc., when we are assessing a new MFI. There's a lot more emphasis on monitoring of portfolio to see if there's any early warning signal, if there's any trend emerging. A lot more emphasis on stress testing to see solvency of an MFI, whether the collections are enough, whether it will sustain to pay the lender back, whether there is enough capital, whether the investor has enough depth to infuse more capital, and so on and so forth. So that is there on one side, heightened monitoring. On the other hand, very coincidentally, about 6 months back, when we did our annual refresh of our underwriting standards, global underwriting standards, we did place a little more weightage on responsible lending and the principle of social performance. And I do see that the responsible lending principles will have a little more weightage in the coming few years also. So, yeah.
Thank you. I will come back in the second round to you. Now I turn to Firoj. In the entire risk framework, is one place, the theoretical part of it and the practical part of it. But what I see that in microfinance, if suppose there is a problem in Eastern UP, for example, like what has happened in 6 months back, my perception is that it is sort of a business wherein what is happening on the ground in that area affects everybody, whatever be your risk mitigant controls, whatever be the institution. Means as an institution, you cannot have something, a competitive strategy or comparative strategy, which will distinguish you from others in that area. Do you agree with that, or you still feel even when others in that area, due to extraneous factors, are not doing good on credit quality, there can be a strategy adopted by a microfinance focused institution to excel?
Yeah, I think it's a very, very kind of relevant point. And so, see, if if the geography, then the whole proposition is that probably it is the geography which determines the portfolio quality, and whether individual companies has any control over it or not, right? Now, if you see the way it works, right? It happens that typically you would have that many MFIs are operating in probably the same community. They would have a lot of common customers, right? So to that extent, if there is an impact, there is an impact in a particular area, then yes, everybody gets impacted. But still, what you see is that the impact is not uniform. Still, you see that if there is a crisis in East UP, it is not that everybody have same quantum of loss, right? Still, you see that variation. So definitely, the field practices you have, they play a large part in determining that what is going to be your number one, what is going to be your extent of loss in that particular area, and more importantly, secondly, how quickly you are able to recover, right? And that is where few things which you all know about, right? How strong is your field discipline, right? That I mean, what sort of relationship you have with the customer, right? Are you sort of kind of connected well with the customer, that you're visiting quite frequently versus you go just maybe once in a month or something? And third, also, what is the customer's perception about you, right? Because at the end of the day, what customer is looking for a sustained relationship, that they want that, okay, I should be able to I would be able to borrow from this particular lender even in the future, right? So if they see that, you are the lender who is providing a good service, where customer feels very comfortable, that the customer is treated with dignity, customer feels that yes, they can really sort of depend on this company as a sort of advisor, sort of, right? Then there is a more propensity that yes, customer is sort of going to prioritize you, right? So yes, if there is any localized incident or something, you still take some losses, but you can largely mitigate that, having certain field practices there.
Okay, thank you. So you are basically saying that yes, there can be a comparative strategy. So Anand, I would like to ask you to specify more metrics if you agree with his view that yes, some institutions, even though it is a collateral damage sort of a situation, some can do better because of few factors. If you agree, can you give some specific metrics of it, that what an organization does, that even if there is an extraneous situation, if there is an external incitement not to repay, or there is something else, there is a rumor floating around or something like that. Some institutions, as Firoz says, obviously come out better, marginally better or a notch better. So what can be the specific things which institutions should take? Because he narrated one thing, where maybe you can drill down more specifics. He said about client connect and client's service, you can say perception from the institution. If there are more specifics, I would like to, because as a practitioners, you can say that.
Yeah, thank you, Alokji. Yeah, I would agree to what Firoz said. I'll give you another perspective. Even within one organization, what you see is across different geographies, you will see some of our own, markets behaving better than the others, which points to the fact that there is also an internal issue. Now, what I want to differentiate is the output is a combination of what is happening externally and the internal practices. So coming down to what is the internal practices, right? I'm more keen on that. It is because of those internal practices that I think you see a differentiator. There is a external event, but for somebody whose practices are maybe what we call as I'll come to that practice, the microfinance best practices. It's very clear, at least from my experience, that people who do that day in and day out seem to perform better. It is very clear for us from the data you see it. It will affect everybody, but how much, at what proportion it affects, there is a definite difference that you can see. Now, what is that if I, go deeper? I mean, if you go down to the basics, right? Whatever you say, our segment is low income, and then we are lending to income generation. They may not use it entirely for income generation, but I think fundamentally we all believe that they are doing it for that. And it is, unsecured, where you can't go to have any legal recourse. So the whole, this whole social collateral that we call does become important. So although, we can argue that this has been reducing, but even today, I think if you go down to the basics, starting with, sourcing the customer directly, in the sense, a lot of times what is happening is we tend to use somebody in between. If you avoid that, source it directly, do the basics of what we call in, the CGT, compulsory group training, and then the GRT. And then you do a loan utilization and ensure that the center meeting happens on time, because that starts much before the crisis. And when you do it before the crisis, and when the crisis comes, you are much better placed, because the customer knows that this institution has a certain method, and with the fact that if you're giving the signal that you will be with them even during difficult times, customers keep coming back. And I think it's a bit, as you said, it's between a few percentage. It's a 5% loan loss to a 2.5% loan loss, and that's where the difference comes. So I would agree with what he says, and I'm going at the fact that it's the basics ultimately.
So going to the basics. So Aziz, when I turn to you, SFB, the current situation you are well aware of, right? And Ujjivan is a major player in microfinance. Two questions to you. One, has it led to any rethink going forward that you will do less of microfinance and more of other secured business? Has it led to any strategic thing? And if, second parallel question is, anything which you have learned from last 6 months experience, which you are trying to do from the risk part of it to keep it straight so that these things don't occur? What are the additional things on risk parameters you have added from this last 6 months? Yeah.
Thank you, Alokji. So in terms of whether the bank is looking at diversification, the answer is yes, both in terms of product as well as customer segment. So, we were making choices. What do we do in terms of a 3-year strategy and a 5-year strategy? We realized that there is a good product fit in the same segment, and there are multiple other products in multiple other segments that we need to be looking at. So within the same segment, we said we want to do products like gold loans, two-wheeler loans, and smaller ticket IL, individual loans, for example. We also started to explore micro mortgages. We started to explore affordable housing. This was almost 2-3 years back. These products are now taking off well. We also started to get into MSME because we didn't want to restrict ourselves to the same customer segment. We said MSME of 30 lakhs, 50 lakhs. And we are now also getting into the 1 crore, 2 crore ticket sizes. So other than product diversification, we are also actively looking at customer diversification, and we believe that 20 to 25% change of customer segment is something that will mitigate the risk for the bank. So this is one area in which we are working, and I'm happy to say that we've launched 5 new products in the last 1.5 years, including supply chain, which is again unsecured but belongs to a supply chain mechanism. Then there is working capital loans to traders, manufacturers, which are high tickets, 2 crores, 3 crores. And then there are LAP, which is 40 lakhs to 1 crore. So all these segments have got introduced, other than gold loans and two-wheeler, which is largely towards the lower income segment. In terms of risk practices, I would say that when we look at it from 2 perspectives. One is, what are you doing on the credit side? And what are you doing on the collection side? Because when the markets go bad, it's important for us to understand how do you respond to it. I'll give you the example of post-COVID, when we were expecting that there would be a flood of delinquency. At the moment the markets opened up in June 21, we were ready with a team of 2,000 people on the collection side, because we knew that, look, there will be an opportunity to lend more, because the market has not got lending for the last 2 years. And parallelly, there would be a need to have a large collections team, which would be required to do collections of the NPAs. And we did almost 1,500 crores of cash collection in the subsequent 2.5 years, purely through collection efforts. So I would say both are very important for us. On the credit side, I would say that, a self-correcting mechanism is very important, which is what we started to see kicking in December, Jan, Feb of last quarter of last year, when people automatically started, our branches automatically started reducing disbursements when they started to see a break in pattern. When they started to see higher delinquencies happening, automatically that self-correcting mechanism started to kick in. And by March, we were growing at 19%, while the industry was growing at a much higher pace. So we believe that everything starts from the branch. If the guardrails are in place at a branch level, if the practices are in place at a branch level, then credit and risk can be mitigated at branches. Parallelly, you need to have a structure which, takes up the response when a portfolio goes bad, and parallelly then we start collecting on the delinquent accounts, maybe 90 plus, 120 plus, etc. One of the points which is also important, when an industry grows very fast, like microfinance was growing at a healthy 30-40% for 2 consecutive years, what also happens is a lot of opportunities open up because people are recruiting. That leads to attrition, and that leads to portfolio quality deterioration also. So this is one of the big learnings. Whenever an industry is growing fast, one needs to be very sensitive to attrition percentages, because that is one of the factors that could lead to instability in a branch, and maybe a large set of branches as well. So these are certain things which we responded to in the last 6 to 8 months, and happy to say that on the attrition side as well as on the delinquency side, we are seeing a lot of positive movement now.
So diversification, yes, over a medium term. And on risk management, you're saying, see the early warning signals and cut down on disbursement, focus more on quality, focus on attrition, and all that has been this mantra for
Yes,
Ujjivan.
yes, absolutely.
Okay. Thank you. Now, I turn to Divya. Divya, in the risk framework, because you are from an international financial institution, nowadays the inward is internal capital adequacy, or ICAP. And ICAP is a combination of all sorts of risks, which I say you can say 7 risks: credit risk, liquidity risk, and blah blah. So, what is you think that what do you feel from a risk perspective? The ICAP model. Suppose there is a seasonal event, like right now for 6 months there is a heightened credit risk. Parallel to it, in last 8-9 months, you can say also, if you would be a risk manager, there is a heightened regulatory risk also. So this ICAP has got percentages, because when you have a composite ICAP, how much capital you will keep, you will say that credit has 20% and regulatory risk has 10%. How frequently should the ICAP model be reviewed? And should these sporadic incidents like 6 months or 1 year be taken into account for tinkering with the ICAP framework on risk?
Sure, thanks for the question. So I think in our view, and it's not very specific to even just microfinance sector, but in general, the market, some factors are there, are overlapping and overarching across, different players within a financial institution. So some risks are there which are inherent just given the nature of the lending practices. For example, regulatory risk is not, something specific to MFIs. But I think what needs to be looked at is that certain risks are there which are applicable across the board for financials. So maybe their periodicity needs to be looked at differently vis-a-vis certain risk factors which are very inherent to the market or the sector which operating. For example, the credit risk that the MFI sector sees, and what we're also seeing, and we've been operating in this sector for close to 15 years now. The sector tends to be, of course, resilient, but it also is very, very, sensitive to any micro or macro risks which affect the underlying, ability of the borrowers to repay, be it a flood event or be it a big macro event like COVID, etc. So I think that those factors which are more nuanced and more the underlying borrowers are more sensitive to, probably the periodicity of review needs to be a little heightened or increased in that manner. But I think for other macro risks, be it regulatory, be it liquidity, these are events which will impact any other player in the market as such. We really look at any institution that we support very specific to its individual strengths and weaknesses, and therefore these factors will be looked much more closely taking into each institution's own strengths and weaknesses. But that would be my general take on this question.
But on the question of what is your global risk practice, that the ICAP should be reviewed at what frequency?
Our view, we don't follow the ICAP for reviewing anything, but we don't really have a internal view. We, as when I say invest, we look at each institution individually based on the various risk factors. So we really don't take into account the ICAP regulatory. But as I said, it's we really don't have an internal global view on its applicability.
So now I turn to you, Smarnika. You represent a cooperative, Seva Bharat. And if I see, if I'm correct, you are not purely focused on credit. You have credit plus activities also, women empowerment, enterprise development, and all that. So I would like to see that, have you also seen heightened risk in your, because you have a small portfolio, but still in that, have you seen a risk increase in last 6 to 7 months? And or second question to that is, if not, are you able to manage the credit risk better than pure credit players by your credit plus activities? And what is the role of your credit plus activities going into credit?
थैंक यू सर आप फर्स्ट क्वेश्चन हम क्रेडिट में फोकस नहीं करते बट सेवा ऑलवेज क्रेडिट पे फोकस करता है बिकॉज हम जो सेक्टर में काम करते हैं सो इनफॉर्मल वुमेन सेक्टर में हम काम करते हैं एंड दे आर द मोस्ट वल्नरेबल आई थिंक सो हमारी सेवा की जो अप्रोच है थोड़ा डिफरेंट है फ्रॉम अदर MFIs. जो जब हम एक बेसिकली इट्स ए ग्रास रूट ऑर्गेनाइजेशन सेवा एंड हमारी कम्युनिटी में जो एक पकड़ है इट्स वेरी मतलब स्ट्रॉन्ग. सो जब कम्युनिटी बेस्ड हम होते हैं तो हम सबसे पहले इनको फाइनेंशियली लिटरेसी ट्रेनिंग देते हैं. जब हम कोई कम्युनिटी में जाते हैं सर्वे करते हैं एंड देखते हैं किस टाइप का क्योंकि हमने हमेशा जो वर्कर्स हैं उनके साथ काम करते हैं. हम सबसे पहले सर्वे में जब देखते हैं कि वो इस टाइप का वर्कर्स यहाँ रहते हैं सो हम फिर उसमें लिटरेसी ट्रेनिंग करते हैं एंड अवेयर करते हैं कि किस तरीक़ा से जो क्रेडिट वो लेते हैं मनी लेंडर से हाई रेट ऑफ इंटरेस्ट में वो बहुत इम्पैक्टेड होते हैं उसमें. तो हम सबसे पहले उनको समझाते हैं कि इम्पोर्टेंस ऑफ सेविंग. देन 3 to 6 मंथ तक हम उनको सेविंग कराना, पहले अकाउंट खोल के सेविंग कराना सिखाते हैं स्मॉल अमाउंट एंड देन हम कहते हैं उनको क्रेडिट ले सकते हैं. सो एंड वो जो क्रेडिट लेते हैं वेरी स्मॉल अमाउंट, जब हमारा रिस्क को देखते हुए, क्योंकि हमें पता है उनकी जो 6 महीने में हम देख लेते हैं उनकी फाइनेंशियल बिहेवियर कैसा है एंड हमारी जो स्ट्रक्चर है उस कम्युनिटी से कम्युनिटी लीडर को एक कम्युनिटी अलग अलग कम्युनिटी से अलग अलग कम्युनिटी लीडर को आज बैंक साथी हम नाम देते हैं जो कि वो कलेक्शन करते हैं एंड वो क्लोजली मेंबर्स के साथ उस कम्युनिटी में रहते हैं. तो वो पता चल जाता है सेविंग जब 6 महीना करती हैं या उनके साथ हम जो डेली कम्युनिकेशन रखते हैं, कनेक्टेड रहते हैं, पता चलता है. सो हम उसके अकॉर्डिंगली सबसे पहले हम क्रेडिट बहुत स्मॉल अमाउंट देते हैं, लाइक 20,000 से स्टार्ट करते हैं एंड अभी हमारा मैक्सिमम लिमिट 3 लाख तक है. बट लास्ट आपने 6 मंथ अगर बोले, मैं जो सर कोविड में तो ये बहुत ही ख़राब था बट स्टिल ड्यूरिंग कोविड शायद मेरी एक्सपीरियंस से मैं देखा कि दिल्ली क्रेडिट कोऑपरेटिव को हमने लगभग 7 करोड़ अमाउंट उस साल में हमने दिए थे, जो 20-21 फाइनेंशियल ईयर में. बिकॉज हमारी जो वुमेन वर्कर हैं वो स्ट्रीट वेंडर्स होते हैं, डोमेस्टिक वर्कर्स या कंस्ट्रक्शन वर्कर्स, ये सब होते हैं. वेंडर्स की जब सारी चीज़ स्टॉप हो गया है तो उनको छोटी छोटी इनकम उनको अपना के लिए चाहिए था. सो उन लोगों ने ट्रेड चेंज कर दिया, जो कि 10,000 लेके एक छोटा सी किराने का दुकान लगा दिया, एक दूध की पैकेट ला के बेचने लग गए, या जो भी स्कोप उस टाइम पे हुआ वो उनका डिमांड आया. तो देखा कि हम लोग स्टॉप नहीं कर पाए खुद को, बिकॉज हम लोग बहुत कनेक्टेड है कम्युनिटी के साथ. उनकी हम लोग ने सोचा था हमारा सेविंग सारी शायद विड्रॉ कर लेंगे बट हम उस टाइम जो देखा है कि छोटे छोटे लोन उनको बहुत हेल्प किया है, जो कि उनका डेली जो एक्सपेंसेस होता है उसको मीट करने के लिए। एंड हमने देखा कि उस टाइम पे 70% ऑफ द जनरल जो हमारे जनरल डेज में होती हैं 70% तक उन्होंने लोन भी लिया एंड 70 तक वो उन्होंने सेविंग भी किया। तो ये नहीं कि सेविंग मोबिलाइजेशन। सो हम लोग अदर इंस्टीट्यूशन से भी लेते हैं जब हमारी कई बार हम लोग को लिक्विडिटी इशू होती है ऐसे ये को। बट मैं जो अपना एक्सपीरियंस में देखा कि ड्यूरिंग कोविड इवन हमने लिक्विड इशू नहीं देखा। उस टाइम बहुत डर था, हमने सिडबी के पास गए, हम एनसीडीएस, हम कई सारी बात कर रहे थे अदर माइक्रो इंस्टीट्यूशन के साथ। बट सेवा एक डेवलपमेंटल जो नॉट फॉर प्रॉफिट वर्टिकल है हमारा, वो डिफरेंट प्रोग्राम्स के लिए काम करते हैं। सो जो सारी रिस्क होती है, हम रिस्क को इस तरह से देखते हैं। अगर सपोज कोई टाइम पे उनको कुछ रिस्क आ गया, सपोज अपस्किल करना पड़ा कहीं टाइम पे, तो वो नॉट फॉर प्रॉफिट सेगमेंट उसको देखता है। अगर हमने दिया जैसे एंड उस टाइम पे उसको इंश्योरेंस, हमारी जो बीमा सेवा जैसे आपने सुना होगा कि वो इंश्योरेंस कंपनी है, हम इंश्योरेंस से उनको जोड़ देते हैं ताकि उनकी अगर कुछ मतलब इवन वो हेल्थ इंश्योरेंस भी देते हैं, वो स्मॉल जो जैसे कि उनकी वेजेस अगर लॉस्ट होता है उसके लिए देते हैं, लाइफ इंश्योरेंस होती है। हम जब क्रेडिट देते हैं तो उसमें हम एक इंश्योरेंस करके रखते हैं उनके साथ ये करके। सो उसमें हमारा जो रिस्क है मिनिमाइज हो जाता है एंड अपस्किल करने का जहाँ पे होता है तो वो हमारे डेवलपमेंटल। सो इस तरीके से सेक्टर हमारे थोड़ा होलिस्टिक अप्रोच है कि मैं अगर ओनली हमारे साथ मेंबर का ट्रांजैक्शनल रिलेशन नहीं रहता है, सो उनकी कहीं सारे एस्पेक्ट रहता है एंड हम कम्युनिटी में बेस्ड है। हमारी सेंटर है जिसको हम कहते हैं कम्युनिटी सेंटर सेवा शक्ति केंद्र। तो एक केंद्र है, कम्युनिटी सेंटर है, जहाँ पे महिला सेवा भी काम करता है एंड एक अदर पार्ट में सेवा डेवलपमेंटल ये भी करता है। सो इस तरीका से हम।
तो स्मकर जी, आप कितने सेवा भारत दिल्ली में क्रेडिट का काम कितने साल से कर रहे हैं?
सर मैं तो सर सेवा भारत में 20 इयर्स में हूँ, बट मैं डेवलपमेंटल सेक्टर में थी। बट जो क्रेडिट वाला काम तो सर आपको पता होगा, जब हम 1972 में सेवा किया 1974 में सेवा बैंक आ गया जो कि स्टार्ट हुआ। बट ये जो क्रेडिट कोऑपरेटिव जिसमें मैं काम करती हूँ 2007 से है, जो कि अभी कोविड के बाद लकीली हम लोग प्रॉफिट मेकिंग है। हम रेगुलरली प्रॉफिट अर्न कर रहे हैं एंड 10 करोड़ तक हम डिसबर्स करते हैं मोर देन 1500 लोग को।
अभी आपका कितना पोर्टफोलियो है?
सर अभी हमारी 13 करोड़ का पोर्टफोलियो है।
13 करोड़।
13 करोड़, इट्स स्मॉल सर। बट हमने 9000 लोग के साथ काम करते हैं, बट जो लोन पोर्टफोलियो में सिर्फ 2000 तक लोग हैं।
ठीक, थैंक यू सो मच। So now on the second round, Balaji, I will pick up from her question. There is always this question in purist mind, like what Seva does. It is a very intense form of working with the persons in the bottom of pyramid, doing other services, credit plus, this, that. And that model, as she says, after 2007 it was established and it is 17 crore portfolio. It will grow very slowly. So on one point of it, that while it can function as a very purist organization of microfinance, but scalability is not there. And while at the same time in India, 80% of population as per household consumption expenditure survey is microfinance client. So in that case, how do you balance? Any ideas?
So, honestly, I think it is a trade-off between trying to reach every individual who doesn't have credit facility versus individually catering to the need of a specific individual and seeing whether that person is able to kind of get better from a poverty angle. If everybody were to have just focused on quality since 2000 onwards, we would have probably never seen the sector grow to 450,000 crores. We would have probably still been at about 50,000-60,000 crores. So scale is important, but at the same time, and I would say that, between the period 2010 to 2012, the sector also kind of grew quite responsibly, right? So people were 2010 to 2022, right? Before the RBI guidelines were removed. What I'm trying to say is microfinance practitioners also inculcate credit discipline, and they also try to help in their own way customers in their own enterprises, right? Whether it is the responsibility of the institution to see that the enterprises of the underlying customer grows, probably not. I don't think it is in their mandate to see whether their enterprises flourishes from credit plus activities. I would think that such kind of activities are, I think NGOs and donor agencies and international organizations are better placed to, with their own funding, to kind of help these customers with credit plus activities, and not the purest institutions.
So basically saying semi-commercial or commercial microfinance is more tilted towards scale, and the real persons at the bottom of pyramid who are, we call in typical financial systems theory, not economically active but destitute or poor, they are the domain of fiscal policy or government and grants. Okay. Okay, thank you. So Firozji, I will now turn to the other part of the question, and that is Anandji, and you also earlier said, customer connect, back to basics and all that. That we are also, as you know, you're part of MPIN. We are trying to come up with best practices, that what should be an operational excellence in microfinance. But we also cannot keep our eyes shut on the changing situation in microfinance, because world is moving. So you cannot go back to practices of 2005. So on that point, now all the customer acquisition is digital, based on tab or mobile of the BRE loaded on the loan officer. The amount disbursement is in bank account. And repayment also, we are increasingly trying to make it digital. So do you think this digital narrative, if suppose repayment also becomes majorly digital, and so clients are reluctant to come to the meeting, and in that case, how do we marry this digital trend of repayment, which we cannot avoid, and going back to the roots of basic practices of client connect? Because that was a major point.
Okay. You see, just, if you look at the broader trend, right, in the society, right, what we are seeing is that, people are relying more and more on smartphones, right, even our daily lives, and it is not happening just in metros. If we go to village nowadays, you would see that even center meetings, we see that lot many women today, carry smartphone, and we talk to them, lot many are also knows how to operate that. So to that extent, digital literacy is progressing very fast, right? And that gets reflected in the collection as well. We see that the amount of collection we are able to do through UPI and all, that percentage is also growing. So the question is then that the whole JLG model, which was based on that person-to-person connect, right? And that was the risk mitigant, because we said that it is a community-based lending. So whether that social collateral, is it in danger if it goes into digital, right? Now, first and foremost, I think it's a universal trend that whenever you are acquiring a customer and servicing a customer through digital medium, the risk goes up many folds, right? And we see that in the digital lending, some of the products that is there in the market, their delinquency and loss rates are many folds than when they're in the physical, right? It is seen in many other countries also. For example, in credit card is established trend that when the channel of acquisition is internet, the delinquency rates are very high, right? So clearly, when you move from a physical to a digital model, the amount of risk that the whole risk proposition is going to be much more elevated. And I think my belief is that in a microfinance scenario, because the whole JLG model is based on that social collateral, it is based on that physical connect. If it moves completely to digital, ceteris paribus, the risk is going to be significantly higher. So the question is then, sort of, how do we sort of, mitigate this, right? And so first let us start with that customer acquisition, right? today, the way the sort of JLG process works in the customer acquisition, there is a huge amount of customer waiting, the customer literacy that goes before you kind of onboard the customer, right? And in my opinion, I don't think that is something which can be replaced easily digitally. I think still we'll have to follow that. So that I think the onboarding process is still has to follow that physical form where the loan officer, branch manager goes, meet the customer, ensures that the end use is correct, it is the right customer, right? Whereas what can probably get more digitally done is probably on the collection side, right? And we are seeing that more and more EPI is being done. But again, one thing we have to realize about the customer base is that this set of customer, right, they have a lot of competing needs. So if they have $1,000, right, $1,000, can be used in many different ways, not just repaying the loan. There are probably school fees to be paid, probably grocery bill is to be paid, right? So unless the loan officer is there in front of the customer, sometimes the repayment may not be prioritized, right? And that is where solely depending on a sort of a digital collection may not be right. So you have to have a both mix of it. So maybe one way to do it is that could be, there are many strategies possible, but one way to do that could be that you segment your customer, you know that this is where your default risk is much higher. So probably, you have some dedicated loan officer for that particular segment where you know that it may not come on time. So you need a personal presence to go to the customer to sort of do the door-to-door collection, right? The second important risk is going to be that whole identity risk, right? Because the moment you move to the digital, there is a sense of anonymity, right? And we see that all the time. Person who is very perfect, nice, and gentleman, right? The moment the person gets that anonymity, they starts abusing in that online thing, right? That happens in credit also, right? So that behavior is also needs to be a little bit addressed. And I think if we do that right mix, that whole acquisition of the customer, onboarding of the customer is through more physical. And also collection is probably a mix of not relying solely on digital medium, but it's a mix of physical and digital. I think this problem can be largely addressed.
Okay, thank you. Now, Ashish, Firoj is advocating for a mixed phygital approach. In microfinance, it will not work. So that is one point. I will not put you on spot on that. But the question to you is that as a new generation organization, as a small finance bank, though from NBFC MFI standpoint, you are the oldest, one of the oldest. What do you think about because you would have seen that now, because of the risk perception, MFIN has released new guardrails. And we have said that earlier our view of the sector was that how much a person's repayment is compared to his or her household income, that is more a good barometer, which RBI did in the regulation. But now we have also said that number of lenders also has to be capped at it, because that is also showing a relationship in the portfolio quality. So on that point of thing, that both the repayment obligation as a percentage of your income, household income, which is 50% as per regulation, plus the number of lenders. Do you agree with this proposition? Because the data says that if you cross X number, even if your FOIR or repayment obligation is less than 50%, there is a higher propensity of default. So do you agree with this?
Absolutely. So the discipline of lesser number of lenders got broken only in the last couple of years. Prior to COVID, it was a very disciplined lending practice. And I think this got diluted to a very large extent post-COVID. There were higher ticket sizes which came in. There were multiple lenders which came in. And retail loans also grew at the rate of almost 50% in the microfinance segment. I would rather say that 50% more people started to take retail loans. The number in the beginning of COVID was 1.3 crore. Having retail trade lines became 1.9 crore. That's what I understand. That's the number that I've been told.
It's currently at 1.5 crores.
Maybe the numbers could be somewhere here or there, but it was about a 40-50% increase in the in the number of people who were borrowing retail loans as well. I can also say that some part of it would be gold loans, but there was an emergence of BNPL during this time. There was an emergence of two-wheeler loans, and to a certain extent, small ticket personal loans. All these things got added, and that is one of the big reasons why the leverage has gone up. And the leverages across states could be very different, but the fact remains that leverages are quite high. So at some point in time, being a responsible, lending community, we will have to take these decisions of, number of lenders restriction, total loan amount restriction, and there is no harm in also testing out where the restriction should be sharper. So if there are certain markets which are saying that the leverage has been extremely high, then we can all get together and say that in these markets, let us cool down the market for some time. It may not be uniformly applicable across all geographies, but certain markets, definitely it makes sense for us as of now to cool the market down for a period of time and then work on stability of these markets. So yes, absolutely, these are the right things to do. It is the best step taken as of now for stability of the for the customer as well as the lending institutions.
Thank you. So Anandji, I will turn to you because one of the major factors of risk in microfinance, which has emerged post the Supreme Court ruling, is identification of the customer. And not only identification you can do through eKYC if you have that mandate from UIDI. But when you report to CIC is not supposed to store Aadhaar. So CIC will store what we have mandated as primary voter ID. And voter ID is prone to, you can say, duplication or something. And now we have started from 1st January, we'll go on PAN seeding also. But still, the problem is going to linger around for some time. So do you think it is a big problem? And other than the steps which we have taken, that is voter ID validated from Election Commission's master database, and secondly, start seeding PAN so that in next 1 year, if PAN is not there, get the PAN done for the client so that we have two robust IDs at least with a better indicator. That will solve the problem, or you think the problem will continue?
Yeah, I would agree with you that, getting the right, credit information bureau for every customer is fundamental. And it is linked to what kind of identifier you use. And I think as a practitioner, we know that because there is a gray area, although the record shows that the customer has less number of lenders, she can borrow from more people. And I think as an industry, we have, agreed to now do voter ID and authenticate the voter ID with the voter ID portal. I think that itself is going some way forward because today I think even the voter ID portal is reasonably better. It is improving, right? And as you have done in MFIN, next going to the PAN is a next step because see, we cannot wait for a perfect solution. And I think if you are in the path, you will get there. Because even if you look across practitioners, even with the current set of what we can do constraints, there are practitioners who do a much better job in pulling out the right credit bureau. So it is also on, I think, on intent on practitioners. I think on the rules that we set internally. Because ultimately it's going to hurt us if we don't do it. So I think we are in the right direction, and hopefully in some way if we can do Aadhaar at some point, even the last 4 digits that we are talking about, I think it will really help the sector.
Thank you. And now I turn to Divya, and because the session chair is asking me to wrap it up in 10 minutes, and I have to give time to audience also. So I don't have a specific question for you. Whatever you heard, any of your last words on, because you work with so many institutions, any 2-3 golden words to improve risk culture?
Sure, no, thanks. And I think closing words would be that we don't think the current situation is a crisis. but it also needs very careful evaluation of each entity's own underlying, DNA and how they operate, how they evaluate. But I think what the industry as whole needs to be, be looking at, and it's something that as investor or lender in the space that we definitely look at, are two things. One is definitely the quality of growth, and by quality of growth, we basically are sort of trying to assess whether has the market reached its penetration in terms of providing financial access to the borrowers, to the bottom of pyramid borrowers, or now is it actually just giving out loans to the same set of customers? Because the principle is that if you have given 5 cycles of loans to microfinance borrowers, eventually, at the end of the 5 to 7 year period, they should be graduating to, be able to access individual loans and retail loans. And this industry has existed for close to 20 years now. But we are not seeing that graduation really happening in the market. So the question, to the practitioners is that really what really is the quality of growth happening, and even if it's to repeat customers, why are they not graduating up? And if it's to new customers, then how are they being onboarded, from where are they being onboarded, etc. So that would be my one point. And the other point, of course, that we look very carefully is on the governance, or in terms of the risk practices. One is having good, robust policies on paper, but how are they really implemented by the MFIs or the SFBs in general, and not just really in terms of how you do underwrite, but also in terms of your responsible lending practices. In terms of how is the disclosure being done to the clients, how are the collection practices being followed. So it needs to be followed both in letter and in spirit. With what I will conclude my statement with.
स्मृतिका जी, एनी लास्ट वर्ड? थोड़ा कम में थोड़ा कुछ बताना चाहेंगे आप, जिससे कि रिस्क को कम रखा जा सके?
सर, हमारे सेक्टर में सर हमने जो देखा, डिजिटली जब पेमेंट हमने सडनली देखा पोस्ट कोविड, नाउ 20% वुमेन आर यूजिंग यूपीआई, बिकॉज और जो मेंबर्स, रेस्ट ऑफ द मेंबर्स रह गए, उनके पास डिजिटल एसेट अभी भी नहीं है. सो एंड उसमें रिस्क सारा जो हमने देखा है, हम लोग को बहुत डिफ़िकल्ट होता है. वो अगर कोई 1000 रुपये यूपीआई कर रहा है, मतलब सेम फ़ोन को यूज करके नहीं करते हैं, कभी यहाँ तो कभी कहीं से. सो जो कि हमारे लिए चैलेंज होती है टू मतलब रिकन्सिलेशन करने में. एंड हम बैंक के साथ अभी वो चल रही हैं, ताकि हम भी टूवर्ड्स डिजिटल पूरा दुनिया हो चुकी है, तो हम भी चाहते हैं जाएं. सो डिजिटल एसेट नहीं होने से हम लोग के लिए थोड़े डिफ़िकल्ट है. बट हाँ, रिस्क अगर हम इमीडिएट उसको अगर उसी मंथ में आया, हमारा डेली कैश रिको होती हैं, एंड हम चाहते हैं जैसे हम लोग को मिला है कहीं से कलेक्शन, बेसिकली हम तो डिसबर्स करते हैं उनके अकाउंट में, बट जब कलेक्शन लेते हैं वहाँ पे कहीं ना कहीं हम एक देखते हैं, रिस्क देखते हैं. सो हम लोग उसको मिटिगेट करने के लिए इमीडिएट एक कमिटी रखा, जो डिजिटली जितनी पेमेंट आएगी उसको किस तरह से कम्युनिटी में तुरंत सॉल्व करेंगे. सो हम उसके ऊपर काम कर रहे हैं.
थैंक यू. एंड because of the time constraint, I will open the floor to the audience now, and 2 questions. Keep it brief with your name and to which panelist should address it. I don't see any hand. I will give one moment. Yeah, please. The lady in the center. Mike, please. Madam, just behind you. Yeah.
My name is Rajalakshmi Kamath, and I'm Bangalore. And my question is not addressed to any specific panelist. But the sense I get from this talk is that now the sector has to even contend with other players, personal loan players, two-wheeler loans. How are you going to even bring about self-regulatory kind of a regulation, which anyway the sector was troubled with?
How are we going to
bring about self-regulation?
Okay.
When it comes to,
See, madam, we have just, sorry on the panelists because I will answer on that behalf. The guidelines which we have issued, we have said for a microfinance borrower, the total indebtedness loans, though regulation doesn't say that RBI, should not be more than 2 lakh, which includes unsecured personal loans. So that will be part of it. Now, how do we regulate that industry? That is not in our hand. So sometimes, as you know, you are a professor, I think from IIM Bangalore. So in the organizational development interventions, we always say you can only control things which are intrinsic to you. External things like the personal loan market or who is lending to microfinance borrowers, we cannot control. But at least we can see that this much of loans have been lent. So we will reduce the microfinance part of it so that the overall sector doesn't. So we are receding, like somebody was telling that now, Ashish was telling, that now around 15% of microfinance clients, what we see last data, have retail overlap. Retail sector loans overlap. No? So that's why we have put in that in our underwriting, we also take into account their unsecured personal loans also. So that precautions we are already taking. But how to regulate them that they don't lend indiscriminately to microfinance clients who have 3 lakh in income, that is for the regulator to see. And we have been raising that point to that. Yeah. Yes, last question. Here. Yeah, please.
This question is not from the business perspective, but from the ecosystem perspective. So, there is a person borrowing loan from multiple microfinance companies and also from non-microfinance companies. So, is it possible for the microfinance ecosystem, which is supposed to take care of the bottom of the pyramid portfolio, to share data among themselves about a customer, what is the delinquency, what is the credit worthiness of the customer.
Okay.
So is it possible?
Okay.
So that would help the ecosystem and probably migrate the low pyramid portfolio to the next level.
Okay. So the short answer to your question is that all microfinance underwriting, when the customer is acquired, you have to take a comprehensive credit information report, which has a record of all its outstanding borrowings and what is the credit quality. So it is already taken into account. But those unregulated entities which do not report to credit bureau or SHG loans that are not recorded as part of it, that the person can gather from the field visits and all that and try to input it. But all the regulated entities data is already checked from the credit information companies before an underwriting in microfinance is done. So that is already taken care of. Okay. So thank you. I think we had time only for 2 questions. The persons are saying was to close the session. Thank you all the panelists. We could not do justice to all of you. So thank you very much again. And thank you, audience.
Thank you, sir, for a session well conducted. Thank you, esteemed panelists. We do have a small token. I request the team to hand over the token of appreciation to the... Yes. And if you could also join us front and center for a group photo op. Please do collect your tokens as you go down from the stage.